6 of the Spartan Journal podcast. In today's discussion, we'll be talking about Nate's story, investing with tax benefit, Roth IRAs, and traditional IRAs. Andrew, who will be joining us today for his first time, he will be talking about stock pickers versus the S&P 500. And I actually saw today that Penn National Gaming is actually going to be in the S&P 500, so that's big news. And also Matt will be talking about the Johnson & Johnson vaccine that got approved in the EU. And also today we are joined by Justin. He'll bring us a bit back into our main topic today, which is how business has changed over the past year due to COVID-19. So I'd like to open it up to Nate.
Hey, thanks, Jake. This week I'll talk about traditional IRAs and Roth IRAs. I dug into this because it's a great topic from the standpoint of retirement plans. A lot of us like investing. A lot of us like making money. And what's better than making money while receiving a tax deductible benefit while you do that? With traditional IRAs and Roth IRAs, that's possible, but you have to know which one is best for you. So this week I just dig into which one is best for your particular situation. And to get to know more about that article, go ahead and check us out at wma.msu.com.
Next, I'd like to introduce Andrew Hendren. He is one of our SJ Spartan Journal, whatever you want to call it, contributors for the weekly newsletter. He also participates at our weekly meetings where he gives a presentation about his topic for this week. So I'd like to welcome you, Andrew. Welcome to the Spartan Journal.
Hey, thanks for having me on, guys. It's good to be here. So for my story, I wrote about how stock picking funds performed relative to the S&P 500 as a whole. I took a look at large cap picking funds who really got the short end of the stick in terms of their gains from last year. I also wrote about tech stocks within the S&P and how the S&P made a lot of their gains this year. I spoke on small and mid cap stocks and how they were able to perform so well. In addition, I wrote about the biggest winners in terms of performance against the market. So go check my story out to learn more about that. And I'll speak more on this later, but something that really stuck out to me from doing this story was the amount of money that was being actively managed versus passively managed within the S&P.
Yeah, and Matt, I saw you did an article about Johnson & Johnson for this week. What do you got for us?
Yeah, so Johnson & Johnson has a vaccine that just got approved in the European Union. And this vaccine is kind of different from the Moderna and the Pfizer vaccine because it's only one shot versus two. And they're still kind of expecting that there's going to be some supply chain issues where they can't produce as many vaccines, but it's still somewhat of a better alternative because it does have that only one shot and it's quick and easy. So if you guys want to learn more about my article, make sure to check out our website.
Now we'll move it to a roundtable discussion. I'd like to pass it over to Justin.
Awesome. Thanks, Jake. Thanks, guys. Yeah, it's been a year since we have all been here at Zoom University. We were thinking about subjects last week and it was just crazy. I saw something come across that it's been 1 year to the date last week. I don't know. But since we were all sent home. So I think we were going to all just pass around and see where we were. I know me personally. So I'm a senior here, about to graduate. I remember last year I was sitting in ITM class when we got an email. It was just after 9 o'clock in the morning. This was one of those 8:10 a.m.s. So I'd been there for half the class. And I remember our professor Tegan, she just looked at all of us. She was like, what, did everybody get this email? Everybody go home. Everybody just go home. I don't know what's going on. I'm sure we'll see you all in a week or two, but we'll keep you posted. And since then, I've been sitting in basically the same seat. It's pretty incredible. So lots changed in the last year. One thing I will mention is, Andrew, great to have you. Active versus passive funds, man. Like you said, it's crazy to see how that's changed. So I know I've been watching the market more, and I guess something I've noticed is the fund flows. You're right, into active management, man. So kudos to you. That's great. That's very interesting. We can definitely talk about that. So why don't we start with you, Andrew? Where were you last year, man? What were you doing, and how have things changed for you over the last year?
So yeah, I feel like I had kind of a similar in terms of being in class. I think I got that email like 5 minutes before my class started, and my econ teacher was like, all right, looks like this is the last class you're going to have for a while. And so that was kind of a bummer that we still had to go to class, but now I kind of feel like I miss it. In terms of where I was last year, I mean, it was pretty crazy to kind of go from being like full in person, like everything was normal. And like you said, I thought we'd be back in a few weeks. But in terms of how things have changed, it was nice this year to get involved with Wealth Management Association, even through Zoom. Like it was a nice thing just to try it out, and I didn't have to pay for it and end up not liking it or something. But I mean, obviously I ended up liking it. And just contacting more potential employers and just trying to get an internship was like kind of a struggle during the summer. But I ended up talking to Professor Schiestel and ended up getting on his email list and getting an interview for a job during the fall, since I was home anyways. And then so I ended up getting that job, and I was able to work during the school year. And now I'm actually doing some work remotely, like once a week. And then hopefully, well, not hopefully, like in the summer, I'm going to be doing some work on the golf course and at my internship too. So I'm looking forward to that. So it has been kind of a crazy transition, but I think I'm in a good spot, and I'm looking forward to getting back in the classroom next year too.
I can go next because I vividly remember where I was and what happened that day when we got classes called off. So kind of a little background, I was at my internship, and I hated going to this internship because not because it was a bad internship, but because it took me like an hour just to get there. Like I had to ride on the bus, I had to walk. So when I was at my internship, I looked at my phone and I was like, oh, my classes actually just got called off. And my boss was like, well, I mean, I guess you don't have to come in anymore. Like, I guess we just have to do it on Zoom or something. So then I went back to my apartment. I lived at Skyview, and I'm in a frat. So I was like, the boys are probably having a good time right now. So I walked down the street to my frat, and we have a sign out in front where it says, you honk, we drink. And like everybody was honking. It was like a party day. And it honestly, it was kind of fun because like, we were getting off, but some of us, I was like, low key, the world is ending. Like me and my buddy, we were like into conspiracy theories. So we're like, this is the end of the world. Like everything's, the stock market already crashed. Like, so I just think that looking back at it, honestly, we had a bunch of people post on their Snapchat, and like, so I think it was like March 11th or 10th when we got called off. It was like that Tuesday. So, but I mean, honestly, like in the beginning, I was super happy because I didn't have to travel. But then like after a while, it's like, I just miss like just people and being around that, like, getting that like, so like the socialization, you just got to like be around people to kind of like learn from them. And I feel like that kind of isn't what it's been like for the past year. And a lot of people have been a lot more isolated and a lot more like antisocial because of that. So I'm very excited to go back though.
Yeah, I remember it was like a couple of days after spring break last year, and like I walked into my class at 10 a.m. Didn't get the email yet, I guess. Walked in, not a single soul in sight. I'm like, why am I here right now? Like, why did I not check my email earlier? But like that at that point last year, those like couple weeks where I was still living in Michigan, like after school got called off, and we just have online classes, and like for the week after, they didn't even have classes, right? Like they weren't even doing Zoom. Like they were just no classes, like do you. And everyone had classes off, and bars are still open, people are still going to other people's houses. And I really do miss that part of socialization, like you were talking about, Matt, from the class, like especially those smaller classes, not so much the lecture halls, but the smaller classes with 40 to 50 people, like where you can like have like just a discussion with your classmates, is something I definitely miss, because asking questions over a Zoom call is just not this, like it doesn't give you the same like output as you normally would. But like I said, I'm just looking forward to going back potentially this summer, like even if I take a summer class here, maybe go back this summer even. So yeah, I'm just looking forward to it.
Yeah, I think I'm the anomaly out of the group. I think during that time I was doing insurance, selling insurance, because I took a whole semester off from school, so I wasn't even in school during the time. And it was crazy just to see the shift. Like at first we were interacting and it was a slow transition. Don't get me wrong. Like we're seeing a bunch of stuff on the news. People are starting to panic. Moms are starting to get worried, calling you to like, hey, wash your hands. Like, all right, mom, it's not flu season. Just chill out. But in all actuality, it was going to turn into something like that. And nobody really knew how drastic it would be. And in my position, it was crazy to see the shift that happened from consumer to business from that standpoint. Just seeing all these small businesses that I worked with just start to panic and suffer in this time of turmoil just due to the economy essentially shutting down because everybody's trying to make sure they're safe and taken care of. And it was extremely crazy to see, but for those that were able to survive, I'm sure they were able to take away some positive benefits that'll be able to help their business in the long run. And I think for all of us, we could learn something or we have something that we've taken away from the experience that we'll be able to bring into this new experience while we're in 2021. So with all that being said, I'm excited. I'm looking back to seeing my boys kicking it at the parties, going crazy. I'm a dance fanatic, so I'm looking forward to doing my thing. But until then, we're still zoomed up.
I know. So where it stands now, it's like March 15th. The email is like 75% capacity. And I think we were talking before that it'll be interesting to see how things like progress. Maybe they'll open up a little bit more. But things will probably never be the same. I think that classes will probably always have some online component to them. I know at least in the business college, they have the ability to do that. So actually that's going to be interesting. What do you guys think about this? So we're fortunate. We have a brand new business college, but there's a lot of old buildings on campus. They might not be able to do this Zoom stuff. I wonder what it's going to be like for them.
I mean, we were talking about this before we got on the podcast. I think like every class will have like in person or something, some form of it. They'll have like where you can come to lecture halls, but like let's say you're out of the country for like vacation or you're sick that day or you're too far from the class. I feel like they'll have that option to like do Zoom, and like teachers, professors have laptops, so like all they have to do is just log in on their laptop and do a Zoom lecture for those that like want that. Because I know for me at least, like I said, I'm in a fraternity, and with us we have chapter meetings in person because a lot of the guys live in the house. But for some of the guys that don't want to live in the house, they just do it over Zoom, and it works out. It makes it more convenient for people.
Yeah, going on Matt's point about like not living in the country or being an international student, like I know when we were recruiting for the Spartan Journal this past semester, there was actually application of a lady that's from India, and she could not like come to our Zoom meetings because she the time difference is just way off. So it's nice that they're recorded so she can like see them, but like if you're not in the country, like a lot of people's parents aren't letting them come to America just for the fact that COVID's still around. So I do believe it'll be offered like for the next couple of years, if not forever, like a recorded version of the class. So that's my 2 cents.
I think it's super convenient as well. Like I have an econ class and I have Professor Ackerman, who's a really good professor, but he's also a goofball. And sometimes like I could just lose focus off of what he's saying and the chats would just go crazy because what he's saying is so engaging and entertaining. And from that standpoint, I end up losing focus and not understanding some of the material during that point in time. So with the lectures being recorded, I can easily just go back after class and rewatch some of the stuff that was already recorded. And I feel like from an educational standpoint, to make sure that your students are actually understanding what you're teaching, that's super important. And I feel like that's something that we'll be able to take away from this whole experience, just because some people struggle with certain tasks. And if you're able to listen to the material over again to make sure you actually know what you're talking about when you're learning it, then I feel like that'll be something that we'll definitely need. So I think that's something that will definitely be incorporated just because of that fact too.
I think for me, it's definitely dependent on the class. Like when we switched in the middle of the semester from in person to online, some of my classes, like one of my psychology classes, people just mainly went to class for the attendance points. And I feel like a lot of the learning could have been done just like outside of the classroom. And so once it became online, you really didn't have to spend much time working on it. And I feel like you still knew the information for the test and everything. But other classes, like my first semester as a freshman, when I took math 124, I feel like if I would have taken that online, I would have really struggled. Like for me, for math, like that's my weak point and I have to ask a lot of questions. But at the same time, if it was recorded and I could watch it a few more times, I think that I could retain some of that information too. So I feel like it could go both ways.
Yeah, and if you guys have ever seen like there's like a service Coursera where they do a lot of these like recorded lectures, and there are MSU teachers and teachers from Harvard and like Princeton and stuff like that that do recorded lectures just like in general, which I think is it's convenient and like it makes it so that people are able to like because you can't really understand something by being told it once, and like Andrew said, if you just I would just go to class for attendance, and like then some classes where a lot of your grade was based on attendance and you didn't go, like then you end up doing bad in that class. And I think that's another kind of shift is like instead of grading on attendance, they're going to grade on whether or not you watch the lectures, because that's really what they care about when they like grade for attendance.
Yeah, Nate or Matt, going on your point about like Harvard or like MIT offering those recorded lectures. I remember freshman year when I was taking CSE, like I was using those MIT recorded lectures for our CSE, and they like helped so much compared to like some of the help that I was getting here. So like, I mean, that there's just so many resources out there. Like it was so much more accessible to like go online and find this help. So I totally believe it has like a bunch of great uses. So I'm definitely going to be seeing it continue within the next few years.
Yeah, I even told people like, and I've been using like online stuff since like high school because my high school was like really hard. And I told people, I'm like, yeah, I learned physics because of Khan Academy. So I think that, it's out there, might as well use it and learn and gain some knowledge because of it. So
I think everybody's become more comfortable with it too, which is great. Like Matt, yeah, I know where you went to high school, man. That's the legendary high school in the area. So like for a lot of people who maybe didn't have those resources before, I think the pandemic, just saying it's already been said, but it's accelerated that trend, right? Like everybody's more comfortable seeing themselves on camera. A professor who before would be like, I'll never use Zoom, like now is forced to use it, and now they'll probably use it. Bad that I'm admitting this, but back in my econ days, yeah, I would just go for the top hat points. I think I spent more time researching stocks for the Investopedia game when I was playing in it than I did paying attention in the econ lectures.
I did the exact same thing. I would just be on stocks the whole time.
So yeah.
And those econ classes have like 600 kids in them. They're just like they're packed to the brim. I don't miss that. I don't miss that part.
No, I'm just throwing this. Something I always remember the econ class, because I took time off. You guys know this, and then I went to LCC, which was always very small classes. Econ was the first class where I remember sitting in the winter and 600 kids and the coughing. Hopefully, we never see that again. But I will never forget just being surrounded by people yakking their lungs out and just sneezing into the air, and this was like disgusting. Thank God that hopefully we don't have to see that again.
I actually witnessed I think it was econ or math, one of the big lecture hall. The girl got kicked out of the lecture hall because she was like coughing and sneezing like uncontrollably during an exam, and she was just like being very like, I don't know, ignorant. I know she needed to like leave the room, honestly, like at that point just leave the room, and she didn't. And like the TA just came up to her and like escorted her out, and she did not come back. She took her exam like in the hallway or something far from us.
And it's also like you like we're talking about like us not paying attention. Like I tried to pay attention the first couple of classes, but nobody else did. Like everybody's either on their phones, on their computers, talking to their friends. Like nobody pays attention to those, So like I feel like those big lecture halls are kind of, it's a waste for the professor's time. Just record it, send it out to them, and grade them on whether or not they finish it. Do like a participation quiz. You'd get way more people learning from that versus like them just coming to class and pretending to learn.
Yeah, I could see that. I mean, those classes, like 600 people in a class does seem kind of gross now when you mention all the coughing and stuff. But yeah, I had Ackerman too for econ, but I kind of miss it now, like just being in person in a class, even if I wasn't a fan of econ. And like you were saying, Matt, like people just like doing stuff on the computer, like there were kids playing like games on their computer in front of me and stuff. So it kind of was hard to focus, but I don't know. I just missed the classroom a lot.
who knows? We might get in trouble for this episode. We'll see. Something else too I touched on earlier. It's been interesting to see the amount of interest that's been in the stock market. So like you were talking about this, Andrew, but I've read so much about inflows, right? So okay, background, I guess, is last 10 years. I don't know if anybody's heard all this stuff, but right, like the what is it? The narrative has been passive management, passively managed funds of the futures. Active management is dead. You'll never see an active managed mutual fund again. That's what we've heard basically since the 2008 financial crisis. 2020, we saw so much money flow the opposite direction. We saw so many more people become interested in actively managed funds, like Kathy Wood, of the ARK, the ARK series, all the ARK ETFs. So much more interest in that. So much more interest in individual stock picking. So I'm sure that we have some people listening that's how they first got interested in wealth management. So what do you guys think about that? You think that's going to continue? Or two, do you think passive management is dead? That's a better question.
Yeah, I could speak on that. So I kind of learned about that through like the past few stories I've done. And so what I actually found out by the end of 2019, $4.4 trillion was being passively managed and 6.6 trillion was being actively managed, like related to the S&P. And so apparently we're going on 11 years of stock pickers in general, like as a whole, underperforming the market. And most active managers couldn't really beat the market. And in my opinion, this was a year with like one of the most opportunities in a long time. Like if you invested your money in in a good point. So I'm just kind of, but I will say, like, I think that these proportions like could be changing based off this, but at the same time, there were a lot of funds, especially like growth and value, who like just did so well, like compared to the market. And even in terms of like large cap stock picking funds who tend like 60% of them underperform the market, like American funds specifically, they had a fund that had like close to 40% gains. So I guess it's all dependent on who's managing the money, but I could definitely see both sides because active, it seems like didn't do well, but there were people involved in active management who went crazy. So I don't know how it'll go, but it is pretty interesting.
Well, I think also a big reason why like active management became a lot more popular this year is like the amount of technology that came out. Like I know Morningstar just came out with like a new analyst software. You have Aladdin at BlackRock, and they came out with these technologies very recently because of the pandemic, because they have more time to program and because like, people are investing more. So I think that is a big reason why like active management, because when you say active manage, for like the listeners, passive management is where they just put money in and kind of just like put into like the S&P 500 and let it do its thing. But active management is like they have to actively like pick stocks, like, okay, this stock is undervalued. This stock is like, a good investment opportunity. Let's put it in this, sell this one. And I think that these softwares allow them to do that because they're able to do a lot more in-depth analysis in shorter period of time. So that's why they're able to do a lot more trades. And I think, and just in general, value investing gains money. That's how Warren Buffett made his money. So I think that's why also that it's kind of the shift, which I'm fine for that. I'm a value investor, so I'm perfectly all right with that consensus.
Like I said, it's hard to beat the market, right? And that's why, honestly, passive funds, like it is hard to beat the market. So like, I'm a big fan of Jeremy Snyder. He's very big advocate of buy early and hold. Like, you just wait for the market to go up. Like you don't put your money in every month or two and just let it sit there. And I think it's just a very volatile market right now. So I think that's why people are very bullish for like active investing in active funds. So I think it'll be a trend like for the next couple of years, but I feel like it'll balance out eventually. Yeah, like once we're over this hump of COVID, and we'll see where the economy goes from there, but it's hard to predict where it's going to go.
Yeah, for individual investors, I feel like going more the active route themselves would be even better. Like just seeing the market go up as much as it has and just seeing some of these small cap stocks just go crazy, like hitting their new 42-week highs. Like this is something we haven't seen before. The amount of stocks that have hit their 52-week highs is just something that's been crazy. And to say that you should invest in the S&P 500 ETF rather than a small cap stock for just a small investor, somebody who's just getting into the market. It's kind of off-putting because you're feeling like you have this great opportunity to invest in this up and coming small cap stock and maybe a few of its buddies that also are in that specific industry. But then somebody's trying to tell you to invest into the S&P 500 or another ETF. It's kind of off-putting. And so for that reason, I feel like small caps and just stock picking in general will be more enticing to people that are looking to invest and grow their money for the now. Now, when we start to see things potentially readjust themselves, then we could possibly see things going back in favor of the ETFs where they're trying to mirror the market.
And yeah. Oh, that's what I was going to actually ask you guys is, do you think that when the, things start to open up that we're going to go back to the passive trend? What do you guys think about that?
I mean, I was gonna say that it depends because a lot of the like actively managed funds, they don't really invest in like bonds. And recently bonds have been like the yields have been super low. And that's also partially why like the passively managed funds have not been gaining a lot. Same with insurance companies and other people that invest in like treasury bonds and stuff like that. It's just because the yields have been so low. So the return and the companies that invest in stocks, their the returns have been high. So I think it depends on like whether or not they choose to invest in like bonds and safer, more conservative assets. So I think it kind of depends on that a little bit.
Well, I remember like this was before our time, before like the dot-com bubble, like bonds were doing crazy and tech stocks were doing very poorly. But 10 years later, 20 years later, it's flip-flopped. So, I mean, possibly we could see the same thing happen again. Like bonds could go up and tech stocks could eventually go down. But I don't think we've hit the crash part yet. I think eventually once we realize that we're like printing way too much more money than we can back up. I think like we're gonna hit like a very tough period where bonds are gonna do great, tech stocks are gonna do very poorly. But don't take my advice, but like that, it's just my opinion. That's what I've seen in the past happen. So, I mean, history repeats itself.
So, active management, it seemed like kind of did worse this year. I do think that like in the future, since it seemed like this past year, it was pretty easy to make money. Like I feel like if you gave like so many people like $1,000, I feel like most of them would have made money this year just by like investing in pretty much anything was making money this year. But I think next year, once some people like started investing this year, once they see like what normal gains are supposed to look like, I think that active managers will play a larger role because you can't just be investing into random things and then just getting huge gains. I think people who really know what they're doing are gonna succeed.
Did you guys see this commercial on ESPN or CBS actually for March Madness? So the official ETF of the NCAA, Invesco QQQ. So yeah, they're partnered up with CBS and NCAA to like have named the official asset manager partner of the NCAA. And they do I think football as well too. So it's like I saw it this week. Like it was very new. Like I saw it when they did the selection Sunday. Well, we got robbed, by the way. MSU got highway robbery with that first four in, but that's all I'll speak on that.
MSU did get kind of we got destroyed from that one. But isn't the QQQ just like the S&P 500?
No, it's the Like you could almost call it like the NASDAQ version, but that's like an infamous fund because like that's been around for a long time. That was one of the big funds that was like a high flyer in the 90s, and then it blew up really bad. It had a tough decade after it blew up until 2010, but then it's been soaring for the last 10 years. So like it's crazy. That's crazy. I never knew that, Jake.
Yeah. They have a sponsored ETF.
Yeah, it's gonna be. My guess is like when we watch March Madness this month, like it's gonna be on every like commercial break, guarantee it. Like I saw it so many times when I was watching Selection Sunday. Like it's crazy. Like I mean, the retail traders, like it's a real thing. Like people, they're really like advertising heavy. Like all these, like not ETFs, but like asset managers now. Like I'm seeing so much more like Fidelity, Charles Schwab, like so many more commercials for those people nowadays than I did even last year.
Yeah, they have like JP Morgan advertisements on a lot of the streaming services now.
I saw JP Morgan Wealth Management ad on my Snapchat. I was like, what is
Really?
this? Yeah, I was like, what is this? So I must be just too much wealth management crap on my phone. But last one here on that ETF trade. Did you guys see the Dave Portnoy ETF that launched a few weeks ago, the Buzz ETF? Did you guys see that one? It's like, it's not his, but he's the same thing. Like you're saying, Jake, he's partnered with him. And I mean, I'll just say it. I'm not a big Jim Cramer fan, but him and Jim Cramer had it out and Cramer just ripped him to shreds about it. It's an interesting, he's like, what are you trying to accomplish with this ETF? And like Dave, God bless Dave for going on there is what I have to say.
Yeah, I saw Penn National Gaming actually. I think they're joining the S&P 500 this week. They like reached enough market cap to join the club. So, congrats, Davey Tay Trader.
Those are going to be like the first. They're at the other ones too. What are the other ones? Penn, Caesars Gaming. So
That's another Detroit.
Yeah, gambling.
Yeah.
Gambling.
Is DraftKings on there too? Because DraftKings is really big.
Generate. I don't see DraftKings. I just see Penn and Caesars Gaming here at this Market Watch.
Well, there's actually an ETF. I think it's Bets, BETZ, where it's like all of those. It's like, all the casinos and all that kind of stuff. And it actually, like, I think it was like May, it was gaining a lot of hype because like people were super into like sports betting and like they couldn't do anything else. So they're like, might as well bet on a ping pong game or something like that. Like
Man, well, maybe that's a future episode is gambling because I've always heard everybody like I've bet on a few games. It's so much more exciting. It makes the game so much more exciting.
I'm finally 21, so I can finally download an app and like do like FanDuel or like DraftKings. Like I'm excited. Like I don't have to use a bookie anymore.
It's fun.
The time of the bookies are over.
Nice.
If you enjoyed the discussion, please like and share the podcast on Apple and Spotify. The Spartan Journal podcast is part of Michigan State University's Wealth Management Association, a student organization whose goal is to inspire the next generation of financial advisors. The Spartan Journal news team releases a newsletter every Monday morning comprised of financial literacy and the week's market updates. Feel free to follow us on social media at msuwma and check out our website at msuwma.com.
Anything heard on the MSU WMA podcast is for educational purposes only and should not be considered as investment advice.